Good afternoon, everyone. My name is Dominique Valgier. I am a community engagement specialist here at HUECU. Welcome to our spring home buying forum. Well, today is day 3. Day 1 and day 2, you were introduced to my colleagues, Migdalia Gomez and Sarah Struggs. They moderated and they had different moderations going on. And today I will be your moderator. And right before we get started, we have some household items that I would like to talk to you about. We are going to reduce the background noise. So all attendees are muted to help with audio quality. And of course, you can use the chat feature to submit any of your questions at any point. Also, any of the handouts and presentations recording today, you can get it on our YouTube channel at MyHUECU. Just also, you can rewatch it at your own time. And we also have a survey, post-survey. So you can complete that survey at huecu.org/survey. And anytime you complete a survey, we will be donating to the Cambridge YWCA to support the unhoused in our community. And we have some raffle prizes for all of our attendees today. Amazon Echo Dot, a Ring doorbell, HUECU swag, of course, and that'll keep you looking great at our community. Now, a little bit of a background about HUECU. Why HUECU? Well, we are community-based. HUECU is exclusively serves the Harvard community and all Harvard affiliates. Once a member, always a member. Even if you leave your job, when you join membership, extends to all of your family members. And also we have some products and services. We have free access to ATMs nationwide, credit cards with cashback rewards, home loans for purchases and refinancing, student loans and refinancing options, auto loans, and more. And of course, we're accessible anywhere. We have convenient locations, online banking, mobile banking, digital wallet ready, and of course, we're access to nationwide co-op shared with branching networks. Now, why HUECU? Why a credit union versus a bank? Well, of course, better value. As a nonprofit, HUECU puts members first in the form of better rates on savings and loans, lower fees, and more free services and perks. We offer better service. Credit unions consistently outperform banks in metrics of customer service and satisfaction. You have a name, and it's not just an account number here. And of course, our better business model. The member control co-op model is always focused on operating in the best interest of our members. And of course, just a quick recap. On Tuesday, we covered real estate market trends. And yesterday, we had some expert panel discussions with an appraiser and an attorney. And today, we are going to take you through the home buying process. And now, I would like to introduce you to our experts. We have Helen Laskaris. She has been guiding homeowners at HUECU since 2016. She has assisted more than 300 members in the journey to home ownership. Helen has a background in credit review and is skilled in qualifying members successfully. That is why our HUECU pre-approval is highly respected. And Helen serves at the Mass General Brigham, Assembly Row, and Navy Yard communities. And of course, we have Daisy Familiar. She has been close to 20 years experience in the credit union industry, where she has assisted members in achieving their financial dreams. As a licensed senior mortgage loan originator for HUECU, she equips all of her clients with the knowledge they need to make informed and confident decisions about how to fund their financial goals. Daisy is fluent in Spanish. She serves at the Longwood Medical Area Community. I will now turn it over to them. They will help you with the home buying journey. They will also help you talk about the mortgage qualification and next steps. Ladies, you have the floor.
Thank you, Dominique. Good afternoon, everybody. We're going to walk you through a little bit of your thought process in thinking about buying a home, what you would need to do to qualify and how we qualify you, and then follow up with next steps. So let's go to the next slide. So what's the benefit of financing with HUECU as opposed to another lender? Well, we pride ourselves in our personalized service. We're looking to have, a relationship with you over the long term. We're not just looking to complete a transaction We have very competitive rates, discounts for first-time home buyers. We discount our rates for the first-time home buyers, low down payments, and very, very transparent and reasonable closing costs. We can offer you a fully digital process from start to finish. Most of our members do like the personal interaction. We have office hours. We're willing to meet you during office hours and outside office hours, do Zoom calls, phone calls, and in person. So most people do like a hybrid model. We also do service all our loans. So in the mortgage market, typically many loans get sold. So the person you're dealing with when you get your loan isn't a person that you would be dealing with after that. So you might get sold to another entity. At the credit union, we handle all that servicing, and that goes back to us wanting that relationship with you. So let's go on to the next slide, Dominique. So the current real estate market temperature, and in day one, if you missed day one, I recommend that you look at the video and get the tips that Dino Confalone and Rich Goulet gave you. Dino's a realtor, Rich is an appraiser, but it is a seller's market right now. The inventory of housing is very low. Rates are very good, so it's challenging. The good thing, I was speaking to several realtors in the past week, and they told me they've gotten a lot of calls from sellers that want to list their homes. I think this situation that we're in has been exacerbated by the pandemic, by baby boomers who have been staying in their homes longer than anticipated, and maybe not as much new homes being built in the past 10 years as previously. So I think it's always a good time to consider home ownership. The interest rates are in your favor, and I think the market hopefully will get a little more balance this year. So let's go on to the next. So where do you start? I think a lot of people I talk to typically start, and if you want to put in the chat if I'm right or not, by looking at homes on their phone, by going to Zillow, going to Redfin or Trulia, and just starting to look. That isn't really where I think you should start. So let's go to the next slide. I think you should contact the lender, contact us, and find out how much you qualify for. That's really where to start. And in the mortgage industry, the lingo that we use is a pre-qualification or a pre-approval. And a lot of people do think they're interchangeable, but they're not. We can offer you both here at the credit union. They both will look at your qualification based on the criteria that are listed, and I'm going to talk about a few of the items in a little more detail. On the right-hand side, we have our pre-approval form, so if you would be interested in taking that step after what I described, you would just fill out some information. Your credit's not going to be pulled by the fact that you filled out that form, and one of us will contact you and we'll go forward. So the pre-qualification is really a verbal conversation that we're having and doesn't result, and we give you a ballpark amount that we think you qualify for, but it's not something you could take to put an offer on a home on. A pre-approval is good for 90 days. It's free here at the credit union, and it results in you obtaining a letter that states we've looked at you, your assets, your income, and your credit, and we qualify you for this purchase price, this down payment, this loan amount. So you could take that and go make an offer on the next day. So if you don't find anything within the 90 days, then you would, renew the pre-approval or take a break and renew it after that. So let's talk about the criteria that we'll be looking at, whether you're doing a pre-qual or a pre-approval. Most importantly, very importantly, is credit. In the mortgage industry, we're looking for a credit score of at least 620. I want to see your credit much higher than that, because if you have a score of 620 and you can get approved, you will find that the cost to you will be much higher than someone that has a score of 720, 740. On the pre-qualification, now here's a big difference between the two. We will ask you to obtain a copy of your credit report, and you can get that from the 3 credit bureaus. You can get 1 free copy a year and provide us with a score from Credit Karma. The mortgage industry does not use Credit Karma. The mortgage industry uses 3 specific models from one Equifax, TransUnion, and Experian, which are the 3 major credit bureaus. And so if you're doing a pre-approval, we're going to use the credit scoring models that are accurate for a mortgage application. So you would have the score that could be used if you bought in shortly after you obtained that credit score. You would have to, renew after 90 days and obtain a new credit score. So the pre-qual is a general idea, but the credit is not the actual credit that would be relied upon. I think a rule of thumb is if you're buying within 9 months or sooner, I would go for a pre-approval and just really know in the mortgage terms, what do I qualify for? If you're a year or two away or you don't want to go forward with the pre-approval, that's fine too. But that's just a rule of thumb. The other thing we're going to be looking at is your down payment. So for first-time home buyers, the down payment is a challenge, especially in this area where the home prices are so high. So every year, the government-sponsored entities, Fannie Mae and Freddie Mac, really set the standard for the mortgage industry of what loan amount they will buy. These mortgages are behind the scenes, mortgages get sold, and we do that too, but we always service our loans so you wouldn't know if that was happening to you, if you were being sold. It wouldn't have any impact on you here at the credit union. So that was a little background. What I want to say is this year's limit is $647,000, which is really high. Last year you could buy a home with 3% down up to $548,000 around. This year that amount's gone up to $647,000. So I did a little calculation. You could purchase a home for, let's say, $667,000 with a $20,000 down payment, and there are other costs associated, but I mean that's a pretty good price point, I think. If you put less than 20% down and don't feel you have to have 20% down to be in a position to buy a home, our first-time home buyers, I would say on average, have between 5 and 10% as a down payment, and they are getting offers accepted successfully. We do have some members that are doing 3% down. But if you're putting less than 20% down, you likely will have what we call PMI, which is an additional monthly payment. And PMI is a company that provides insurance to the lender that if you didn't pay, that the PMI company would make sure the lender could recover what they've loaned to you, essentially. So that payment is going to depend on your credit, the amount of the loan, and the loan to value. So for example, I looked and said, I did that sample purchase of $667 with a loan of $647, and if your score is 720, that PMI payment's $300 a month. If your score is 740, an estimate of that would be $250 a month. So can you imagine if your score was even higher? And I know that sounds like a lot, but with $20,000, you're purchasing an asset that's valued at $667,000. And the housing market has grown at a rapid pace in the past 10 years. We don't expect it to grow as rapidly, but we still expect it to grow in the single digits, in the mid-single digits. So that's the down payment. We have as little as 3% down. We also have a program called Home Ready, which is for low to moderate income that has some additional flexibilities built in. If you qualify for that, we would talk to you about that. We do offer multifamily home financing. We have an adjustable product where you could buy a 2-family with 5% down. So we have a lot of interesting products that could work for you. We also finance in all the New England states now. So that's something new for us in the past year or so. So that's really exciting. With remote work, a lot of people are thinking, I'd love to live in the White Mountains, and you could still finance with us and live there. So we also have jumbo loans. A jumbo loan is a loan that exceeds the limits that are set by the secondary market. And in certain areas, like really tight around Boston, you can go up to $770,000 without it being a jumbo loan, but you need 5% down. I don't want to, get into the weeds on that here, but we do offer jumbo loans. We can go up to a $1.5 million loan with 10% down. So then that's a little bit about what we talk about in the pre-qualification or pre-approval discussion. Additionally, we're going to look at your assets and we're going to look at your income. Now, for income, we have a guideline that we don't want all your debts on the credit report, your monthly payments, in addition to this proposed housing payment, to exceed 43% of your gross monthly income. The old school rule was 28% for housing and 36% for the rest of your debts. But in today's world, I don't see many people who are meeting those numbers, and we understand that. I think it's really important that you do a budget. Now, one other thing I want to mention, if you have a second job, the rules are that we want to know you've had that job for 2 years before we'd include it as income. If you're doing Uber or Lyft, we want to see it on the tax return. And additionally, I just want to mention one area that I think might come up. Your student loans have likely, if you have student loans, a lot of people have student loans, are likely have been in a COVID deferral status, which I believe the payments should be starting in May. So you have options of how you want to start your payments, whether you want to go on standard payment, income payment. And that would be a future monthly payment on your credit report that would impact your mortgage qualification. So having a discussion now would be really helpful in terms of, maybe, having an impact on how you would go into repayment on your student loans, depending on whether you want to buy a home, whether you can afford it, with what payment method, et cetera. And we don't recommend, if you can help it, taking on new debt when you're looking to buy a home. So let's go on to the next slide. And we're happy to answer questions at the end. I know I've said a lot as a mouthful. I'm hoping you'll just get a general overview and contact us to go into specifics with your case. So we partner with GreenPath, and that's a benefit of being a member of the credit union. And on GreenPath, they would be happy to do a credit report review with you, or a budget review. And I recommend you take advantage of it. I have people that I talk to that get very disappointed that what they qualify for, or that are shocked in the other way of how much they qualify for. So I usually like to start with, what are you paying for rent? Is that comfortable? And I recommend contacting GreenPath and getting some guidance on what you're comfortable with for a monthly housing payment based on your other expenses, because you don't want to pay for a home and then have it curtail your lifestyle in any way. So this is a free service to all our members, and I encourage you to use that. Let's go on to the next. So if you've listened for the past couple of days, I think you've gotten the theme that, buying this home or getting a condo and I'm focusing on a primary residence in this discussion. We do offer second home and investment properties too, but I don't want to talk about those right now. But you need to assemble a team. So I've talked to you a little bit about what the credit union can offer, but you want a lender that has a good product menu. If we don't offer every product that there is, but if we know what's out there. If we don't have what you need, we certainly would refer you and let you know that, and let you know where to go to find that other product. And you want a loan officer that's available outside business hours and give you good service. Now, this is very crucial, the realtor relationship that you establish. This is the other team member that you're really going to need. And you want to, I'm amazed at a lot of people, like I said, I think people go on their phone and start looking at properties. If they see a property they like, there's usually a picture of a realtor there, and they'll call that person, go see the property, et cetera, and follow up with that person. That person could be paying to be in that ad. So I don't recommend that you take that route to find your realtor. What I recommend that you do is talk to colleagues, friends. You could talk to us. We have a lot of experience with purchases. And interview a realtor. Do your due diligence. You want a realtor that's going to be working in the communities that you're interested in buying in. You want them to be full-time, experienced, and you ask questions. How many deals did you do last year and the prior year? What communities were they in? So those are the kinds of things you want to ask a realtor, because the commission for the realtor is paid by the seller. The seller will have a realtor, you'll have a realtor, and that commission is totally paid by the seller. Yours and the seller's commission is paid by the seller. So it's really, really, and you typically will sign a contract with a realtor that they're going to act as your agent if you buy a home in the next 90 days. There's different terms that you could select, So if you pick someone from the phone and they end up ghosting you, you're calling them, you want to get into a property and they're not returning your call, you might be stuck with them because unless they let you out of the agreement, you'll have to stick with them for at least the 90 days. So do your due diligence up front. You want a realtor that knows how to make an offer, that understands the market, that can give you an analysis of the markets that you're looking in. If you're looking, for example, in Quincy and Newburyport, those are two markets that are very different. One realtor might not have expertise in those, but they might have a network and know someone, or you could sign two separate agreements, one for Quincy South Shore, one for North Shore, depending. So I can't emphasize how much the realtor selection is important to put some effort into locating that realtor and finding the right team member. Additionally, you will have an attorney that will be, Paul talked about it yesterday, Paul Clough. The attorney will come in after you've gotten your offer accepted. We have attorneys that we work with, and they adhere to our closing costs that are shown on our website. We're very transparent here. Everything is on the website, our rates, our closing costs, so you could get an estimate for yourself anytime. And so we have a lot of attorneys that will adhere to those costs. Your realtor will have a lot of attorneys they work with. So if you trust your lender and your realtor, your attorney selection shouldn't be as difficult, but you want to make sure the fees, that the costs are outlined to you. The cost of negotiating the contract is outside of the closing costs. We have some attorneys that have no charge for that, or others have a nominal fee. But I've seen outside attorneys charge a lot. You know, we encourage attorneys, if your fees are lower than ours, we'll use your fees. Otherwise, we really don't want our borrowers to get overcharged. So the attorney, you'll have a lot of help with between your realtor and your lender. And you want a trusted team, because in this market, if your realtor says this property is going to go for over asking, go back to Helen and find out what it's going to look like if you bid $50,000 over and the appraisal comes in low. So that you would come back to me, we would run numbers. I would say we do the what if. Additionally, if you get a really active full-time realtor, they might be able to get you into properties sooner than everybody else, or they might know of some listings that are going to be sold and not come on the market, things like that. So I really want you to focus on the realtor and getting a good realtor as part of your team, because you're going to be nervous. It's stressful, but when you have a team of people that you trust, are looking out for you and are knowledgeable, it takes a lot of that away. So let's go to the next slide. So I want to focus on the realtor again. And so when you're working with a realtor, you have to help them out. You have to let them know what you're looking for. So think about, before you contact the realtor, to the best of your knowledge, based on what you know right now, what's your priorities in buying a home or a condo? Most likely, you're not going to be able to get everything that you're looking for unless you have an unlimited budget. But you know, let them know, I want to be close to good schools. I want to be close to work. 2 days ago, Dino showed the map of the commuter rail. A lot of people are willing to go further out to get a single family home and commute in 2 days a week versus get something, you know, that's a lot smaller, or go to a condo because they want to be really close to Boston. Depending on your budget, you might have to make some of these choices. So you really let your realtor know what are the desired features too, that you must have or that you're willing to compromise on. I have people that, you know, live multi-generationally. So I have people with their older family members. They need a bathroom on the first floor and a bedroom on the first floor if the house has stairs, or they need a ranch, you know, things like that. I can't compromise on that. My mother's going to be with me, etc. One quick item. Just for example, I had a customer that wanted to buy a single family in Newton. Well, we looked at the prices. The realtor told them, you know, there's nothing in your price range. So they had to decide. You could look in a little further out, Natick, Framingham, if you wanted to go Metro West and look at single families there. Or alternatively, you could look at townhouses in Newton. You are in a price range to get a townhouse. And that member ultimately chose living in Newton with the school system, et cetera, was their priority. So I'm just mentioning this because, you know, you will probably have trade-offs. So let's say that you've gotten your pre-approval, you've done your due diligence, you've gotten a realtor, you found the property you want to make an offer on, the realtor, you went over, you saw it. I do recommend an inspection always. You got your inspection and you're going to move forward. So Daisy's going to take over and take you through that process in actually what's going to happen once you have an accepted offer.
Thank you so much, Helen. Hi, everyone. Thank you for taking the time out of your day to come to this home buying forum. We're happy to be here and hope that the information that is provided is of help to you. So now that you have found a place, every state has their own process to purchase real estate. The process is similar from state to state. Today, I'm going to focus on the way it works in Massachusetts. Massachusetts has a two-step process for purchasing real estate. The first step is the offer to purchase. Once you have found a property and are ready to make an offer, your agent will be the person who helps you in the preparation of the offer to purchase document. Your agent should be diligent in presenting the offer to the seller's team and on making sure that you receive a response back from the seller's team in a timely manner. Essentially, whatever you wish to have happen as part of the purchase transaction should be listed in writing on your offer to purchase document. The document should list the purchase price, your intended down payment, your intended closing date, and any contingencies you wish to have listed on the document, such as a home inspection contingency, a finance contingency, an appraisal contingency, and if you are buying a condominium, a request to review the condominium documents, including the documents that detail the condominium finances. The offer to purchase document is a legally binding contract only when it's signed by the seller and you, the buyer. Once the seller accepts your offer, you will be required to give an initial deposit of approximately $1,000. The next step is a purchase and sales agreement. The purchase and sales agreement is similar to the offer to purchase, but more detailed, with every aspect of the purchase transaction spelled out. You may want to hire an attorney to help you with this step in order to make sure that your interest in the transaction is protected. The purchase and sales agreement document is also a legally binding contract only when it's signed by the seller and you, the buyer. You will be required to give a second larger deposit once you sign the purchase and sales agreement. Usually the total deposit given is 5 to 10% of the purchase price minus the deposit you gave when you made the offer. Please refer to the recording on day 2, where attorney Paul Cloth described the purchase and sales agreement process in more detail. Next slide. Once your offer to purchase is accepted and you are sure that you will not be changing your mind on the property, you should submit a mortgage application. This will help expedite the processing time on your transaction. The application process is very involved, no matter who the lender is that you choose. There are a lot of moving pieces and a lot of information is required, which is why preparation is key. Learning as much as you can about the process, like you're doing now by attending a home buying forum, having a positive frame of mind, and having the right team on your side are very important. Once you choose a lender, a loan product, and submit your mortgage application, the interest rate on your application will be locked for a set period of time. The lender will provide you with an official loan estimate. The loan estimate indicates the terms of your loan, the projected payments, and the closing costs associated with your transaction. Next slide. You and any other applicant on your transaction will be asked to provide applicable supporting documentation. You should aim to submit most of the documents that are asked of you within 5 to 10 days from the day you submitted your application. The lender will order the appraiser with a licensed appraiser. The appraiser will need a copy of the purchase and sales agreement in order to complete the appraisal report. Once a decision is rendered on your mortgage application, there are 2 ways the lender will let you know that this has happened. You will either receive a notice of adverse action or a mortgage commitment letter. If you have gone through the pre-approval process with a reputable lender, your chances of getting a commitment letter are significantly higher than someone who didn't. A mortgage loan commitment letter confirms that your lender will provide the funds you need to purchase the property. This document is the proof that you need in order to confirm that you met your finance contingency. After any approval conditions are satisfied, your mortgage file will be cleared for closing by the mortgage underwriting team. and the closing attorney is notified to prepare your file for closing. A few items you may want to keep in mind while going through the application process are: the loan estimate document can be used as a comparison tool to shop for the best product that will fit your needs. The loan estimate document is just that, an estimate. Towards the end of the transaction, the closing attorney will confirm the actual cost for which you will be responsible for in order to finalize your transaction. Closing costs refers to the charges, fees, prepaid items, and escrow deposits that you will need to pay in order to finalize your transaction. The supporting documentation that the lender will request in order to render a decision on your transaction typically includes a copy of an accepted offer or purchase and sales agreement, proof of income document, proof of sufficient funds to close. If you are receiving a gift to cover your down payment, the gift must come from an immediate family member. It must be deposited inside one of your asset accounts at least 15 business days before your scheduled closing date. Make sure to pay attention to your RELAC period. Your transaction must be finalized before your RELAC expires. Otherwise, you can lose your rate or you may have to pay a fee to extend your RELAC. Make sure to inform your lender of any special circumstances that may apply to your transaction and which could potentially delay your application process, such as the property you're financing is a new construction or a condominium conversion, or you or any other applicant will be traveling during the application process. Try not to make too many transfers between your asset accounts during the application process, and hold off on applying for any new credit or obtaining new debt until after you close on your mortgage transaction. And finally, please know that there may be more documents that are needed from you or the seller side after the commitment letter is issued. Be diligent to submit these documents as soon as possible in order so you can get your clear to close. Next slide, please. The closing. The closing attorney sets a time frame for your closing appointment. You will receive closing disclosures. It's a closing disclosure package with a final accounting of all the costs associated with the mortgage transaction. And this packet will come approximately 7 days before your scheduled closing date. Make sure to compare the costs listed on the closing disclosures against the most recent loan estimate you received from your lender. All applicants on the transaction, including yourself, will need to acknowledge receipt of the closing disclosure document at least 4 business days before the scheduled closing date. Otherwise, you will not be able to close on the transaction. Next slide, please. So the mortgage roadmap gives you an overview of all of basically how the process unfolds from beginning to end. And this will be, if you go to the next slide, it basically gives you a breakdown of everything that will happen. First, you go through the pre-approval process, and then you have an offer accepted, etc. Next slide, please. Now I'm going to turn it over to Dominique, who will provide you with some helpful information towards the end of this forum.
All right, thank you so much, ladies. We have now some time for questions. We will try to get to a lot of them. However, we may not get to some of them, but we will definitely do our best. So the first question is, what is the best way to keep track of the market interest rate? Daisy?
So the best way, I mean, you can see, if you go into our website, as Helen mentioned, you are able to see what the rates are. And typically on our website, the rates are changed daily depending on what the market is doing. You may also be able to do a Google search to see to get an idea what the rates may be. Typically when the rates are going up or decreasing, there'll be multiple news outlets that give you that information to give you an indication of what may be happening in the market.
All right. We have another question. We live in New Jersey. Would we still be able to finance our mortgage with HUECU? Helen?
Oh, thank you, Dominique. Unfortunately, we are not financing in the mid-Atlantic states right now. We are financing in Connecticut, Rhode Island, New Hampshire, Maine, and Vermont.
All
But we
right.
hope, I mean, I think we hope in the future that we will be expanding, but right now we're in the New England states only.
Okay. I have another question. If I do decide to team up with HUECU to start the home buying process, what would I need to become a member? Daisy?
So to become a member, you have to be somehow affiliated or eligible for membership, either by a immediate family member or yourself. The membership could be completed online. It's an application. It takes about 5 to 20 minutes. And all you need to do is basically make a deposit into a shared savings account. The shared savings account basically makes you part owner of the credit union with that $5 deposit.
Okay. Will my credit be affected if I need to buy a car during the home buying process? Helen?
Oh, that it could be. So when you say during the home buying process, I'm going to answer that in two parts. One, prior to being in an application, or two, when you're in the application process. So prior to being in an application, if you're still shopping for a home, your car breaks down, you want to buy a car, there's two things, if you were pre-approved, that you would want to do. Number one, we need to factor that new car payment into your debt ratio. That 43% of gross monthly income, we'll be looking to add that car payment in to make sure that you still qualify for the same amount that you originally requested. And an inquiry usually does have an impact, a minor impact, on credit score. The extent of the impact depends on what comprises your credit score. Someone who's fairly new to having credit, that only has a small credit card and then gets a car loan and gets an inquiry, or has had a few other inquiries, it could have more of an impact. If you're in the application process, so let's say you've already applied for your mortgage, we're using the credit report score at application throughout the process. We're not going to pull your credit again and get a different score. However, we do pull your credit at the end of the process for the purposes of ensuring that you haven't incurred any new debts. So we would see that there's an inquiry from a car dealer or whatever, and then we would reach out to you for an explanation. And this is happening 24 to 48 hours before you close. So always tell your loan officer if anything's happening like that, or if you're purchasing a vehicle during the loan process. So if you've already applied, it's not likely that your credit will be impacted from the score we got at application, unless there's delays. If it's prior to application, there probably would be some small impact.
All right. We have another one. Do you have to be searching for a home in Massachusetts to get pre-approval through HUECU? Daisy?
So you don't have to be searching for a home in Massachusetts, but it will have to be one of the New England states. Massachusetts, Rhode Island, New Hampshire, Vermont, Maine, because if you want to get a pre-approval, we can only, at this time, we can only discuss the process for those states. Eventually, as Helen mentioned, we're going to go national, but at this time, we're only financing in the New England states. So we're only privy to the rules and regulations of those states.
All right. Could you please provide an estimate on the savings needed without taking into consideration the down payment? How much are the closing costs? Helen?
Well, you could go on our website and get an estimate, a pretty accurate estimate. The other costs can vary. I use, as a rule of thumb, 1.5% of the purchase price for closing costs. It could be different if it's a single family or a condo, because for a single family, we require that the first year of home insurance is paid, and usually on a condo, the insurance is covered by the condo fee. So that would be a rule of thumb. In different communities with high taxes, with high tax rates, you could experience higher closing costs, because we do usually escrow for real estate taxes, which means the real estate tax payment would be included in your monthly mortgage, and we collect a cushion up front. So I would say I would estimate 1.5%, and we can fine tune it if we have more information from you. And in addition, we want to know that you have 2 months of payments left in your assets. That can be in retirement assets. It doesn't have to be liquid. So that's what to expect outside of the down payment.
All right. Does HUECU keep the mortgage for its life, or is it possible that it will sell to someone else? Daisy?
So that's an excellent question. So the credit union has the option of selling your mortgage, and when you close, you'll be sending a disclosure to that effect. However, even if the credit union were to sell your mortgage, we will keep the servicing, and that's what essentially will matter to you, because keeping the servicing means that you always deal with a credit union for the life of your loan. Whereas if you went with another lender, they will sell the loan and the servicing. And if that happens, you will deal with a new lender set of rules and regulations, and will be subject to their fees that may apply to the new lender.
All right. Is a mortgage rate locked in on the day you apply? What if rates drop between the time I submit my application and closing? Helen?
Well, every lender will have a different policy regarding rate locking. We lock you in on the day that you apply. So the rate you see on our website, that's our current process. Once you submit your application, you're locked in. In most instances, rates are not changing that rapidly, and you know, we don't offer a float down option, which means to provide you with a lower rate if rates go down. But you know, it's usually a pretty quick time frame, so there's not changes in rates during the process.
Okay. What happens if during the final walkthrough, the seller has left a lot of belongings behind that were supposed to be removed from the property? Daisy?
So during the final walkthrough, you will go to view the property with your agent. And if that is the case, so basically the idea of the final walkthrough is to make sure that whatever was stated on the purchase and sales agreement and has happened, as well as whatever you like, the way you agreed to have the property at the end will happen. If there's a lot of belongings, or let's say that there's damage to the property, then you wouldn't close. You would talk to your agent in order so that your agent could discuss the situation with the seller's agent, and they could resolve the situation. After the situation is resolved, then you can set a new closing date.
Do we need to get pre-approval while shopping for houses? Helen?
Well, you don't need to get a pre-approval to attend open houses and to look at homes. But if you are working with a realtor, you're looking to establish a relationship with a realtor, you want to know what you qualify for, it's recommended. Many realtors do want to see a pre-approval rather than a pre-qual, not all, but some. It depends what you mean by shopping for a home. When are you looking to buy? I mean, if it's a couple years from now, you don't really need to get a pre-approval. I would get a pre-qualification at the very least, because you want to make sure that you're looking at homes that you could afford.
I'm planning to buy in Western Mass. Will HUECU still be available to me for this process? Would there be any issue getting the funds from the Boston area out to the part of the state in a timely way, or any issues that would come up? Daisy?
So Western Mass is still part of Massachusetts, so there shouldn't be any issues. And so the way the funds, basically the closing attorney will be the person managing the transaction. The lender will give him the funds from your loan. It will be typically a wire transfer. And then you will give him your attorney any remaining funds. So the timing of when the lender will send the funds to the attorney is not too far off. Basically, because everything is electronic, there shouldn't be a problem. It could be the same day, and they'll receive the funds in order to pay for the transaction, to pay the seller, to pay the city, counting, etc.
All right. In assembling a team, who should be reached out to first, the lender or the realtor? Helen?
Well, I'm really glad someone asked that question, because they know they need to assemble a team. So hopefully you learned that today, or you may have already known it. I recommend reaching out to a lender first, because you want to know how much you qualify for, because the realtor is going to want to know that. What price range are you qualified to look in? You could reach out to a realtor and then go to the lender too. I mean, but I think the lender is the right place to start personally, but there's no totally wrong way to do that.
Okay, would you recommend having your debts not exceed 43% of your monthly income? Does your monthly income refer to your gross or net pay? Daisy?
So essentially, so basically, we will look at your income before taxes and deductions, so your gross pay. But you also want to keep in mind your lifestyle. So once we give you a pre-approval or pre-qualification, we're going to look to see that all of your minimum payments, whatever shows up on your credit, plus anything that is mandated by court, child support, alimony, separate maintenance, plus the projected housing payments, principal, interest, property taxes, homeowners insurance, condo fee, PMI, etc., do not exceed 43% of your income before tax and deduction. That doesn't mean that you want to be house poor, meaning that you want to keep in mind what your take home pay is when you are deciding how much you want to buy a property for. You may want to take vacations, you may want to still contribute to your retirement account, etc. So the lender does take your monthly income before taxes and deductions, but you want to keep in mind what you want to happen after you buy the property.
Why are gifts from home buying required to only come from an immediate family member? Helen?
Well, I think, the reason is that none of the down payment can be borrowed. And I think in general terms, it's felt that, if it's from not a family member, who would give you, a gift of X amount of dollars. So, we're not trying to say that a friend couldn't do that, but it's just not really allowed in the mortgage process. I mean, a partner is different, but a friend would not be an eligible donor on a gift. And we can get gifts from, any amount are acceptable. We have to document the gift. So a cash gift wouldn't be allowed. Just to elaborate for a moment, it would be required that the donor complete a letter and sign that this is a gift. It doesn't have to be repaid. And we would want to see evidence that the funds came from the donor. So you can't, have a $5,000 cash deposit and say this is a gift, because it's very difficult for us to source cash. Just mentioning that we have to have a paper trail on gifts. They can be from out of the country, though.
Okay.
Yeah, just to clarify, they can be from family that's not living in the U.S. That's fine.
All right, that's good to know. Thank you, Helen. Another one is the process different for a first-time home buyer interested in buying an investment property or multi-home? Daisy?
Sure. So the process is different. So typically the first-time home buyer credit that you may, or the first-time home buyer program that you may qualify for, is for owner-occupied properties. If you're looking to buy an investment property, that will be it will be a business transaction. So you are not typically going to get the discounts that you will get or the perks for being a first-time home buyer. Also, if you're a first-time home buyer buying an investment property, we will not be able to use the projected rent to income that you potentially get for renting the property. So it will have to be based on your income in order to qualify.
Okay. What does the timeline for the home buying process look like? How many weeks, months does it take? How many months prior to my current lease ending should I look or make an offer? Helen?
So we have a lot of people right now whose leases are expiring around September. Ideally, the process takes around 45 days. So you would want to, if your lease is expiring in September, in the best of all worlds, you go under agreement in July, and then you close in September, so you're not double paying your rent and a mortgage. But it's very hard to exactly time it. I would start looking now if your lease is expiring, in September. There's some strategies you could use. For example, you could rent the property back to the seller for up to 59 days. So you could close and say, I'm looking to find a property where the seller wants to stay until X. It might be difficult to find, but you can do that. The other thing, if you're really serious, see if your landlord could let you go month to month, because because of the low inventory, people are looking, not finding. then when you re-sign a lease for a year, you kind of take yourself out of the market for 6 months. And sometimes the winter time, it wasn't true this year, is a time when the property prices are a little lower than in the spring is the hottest market. And there's also not as many buyers in the winter. So if you could month to month your lease without having them charge you a lot more, that might be another strategy to employ.
What if I want to buy land and build my house? How would this process be different? Would I be applying for a loan or would I still qualify for a mortgage? Daisy?
Sure, that's a great question. So if you are needing to borrow money to purchase land, you will have to find a lender that specializes in land loans. Unfortunately, at this time, the credit union does not offer, and there's not that many lenders that offer loans for land. Also, if you are thinking of building in that land, you will need a construction loan. And that will be typically you have to find a lender that offers construction loans. Typically, construction loans, just because there could be a lot of unknowns and possible risk for the lender, a little bit more expensive. And a lot of times, while the property is being built, you may have basically a variable interest rate. Whereas if you're buying a property, like a dwelling that's already there, if you have the option of having a loan that is a fixed rate product.
Can you explain what happens if the appraisal comes back lower than the amount you offer to buy the property? Helen?
Well, that's a very appropriate question for our times, because right now there's a lot of homes that are selling over the asking price. And what we do is we strategize. We're going to lend based on the lower of the appraised value and the purchase price. So if the appraisal comes in low, all of a sudden, all the figures are now being based off the lower value. So it doesn't mean you're automatically going to be denied for the loan. So if you're putting 20% down, let's use that example, and the minimum down payment would be 5%, instead of your down payment being 20%, the lower appraised value is making your down payment be 15%. So because we're basing it off the lower value, so at that point, you're going to have PMI on your loan. But you can't just assume denial. I mean, if you're putting 3% down and the appraisal comes in really low, pretty much the deal's going to fall apart. But if you're putting a decent amount down, and typically a seller taking an offer over the asking price is likely going to be taking the one with a good down payment because they know there's room. And what I do, and what we all do here at the credit union, we strategize with you ahead of time. What happens if the appraisal comes in at this amount or that amount? What does that mean for me? So some people try to put a floor. We'll buy it as long as the appraisal comes in at 700. If it's, say, they're offering 750, they're well aware that they're paying a premium, but they're willing to do so because they anticipate the market is going to continue to go up. They want to buy now. And, I can't say if a seller will take that, but you can try to do that as a strategy. So the appraisal coming in low, and not that many do come in low. We've had a very small percentage, but it does happen from time to time.
All right. If you have two people applying as a couple and one is a first timer and one isn't, can you still qualify for the first time buyer status? Daisy?
Yes. So at the credit union, and this could change from lender to lender, at the credit union, at least one of the borrowers needs to be a first-time home buyer for the file to qualify for the first-time home buyer status.
All right. We have another one. Who should I reach out to get a pre-qualification application? Helen?
Well, you could reach out there's 5 of us here at the credit union. If you go on our website, you'll see our contact information. You can reach out to us by email, by phone. So you would reach out to a loan officer. And the pre-qualification, as you recall, was just the initial discussion and coming up with qualification amount based on what you say your credit is through your source, Credit Karma, whatever. And that's the starting point. I recommend that everybody do that if they're really interested in purchasing, just to see where you stand right now. Even if you're not thinking about it for a couple of years to actually do the purchase, I think knowing where you stand can help you make the plan of where you want to be at the time you want to buy.
We're almost wrapping up, but we have time for a few more. If I change jobs during this process, what impact would that have for the process? Daisy?
So it all depends on what basically your income is going to be. If you're changing jobs for the better, let's say that you are working and going to school, and now you're going to have a higher degree, whether it's a master's, etc., a PhD, and you're going to get more income, and your new job source of income is going to be from full-time employer, like employment. That's not really going to be, if anything, that's going to benefit your application. However, if you are changing jobs, you're going from being a full-time employee, a full-time W-2 employee, to a self-employed applicant, then you will have to wait at least 2 years. And the same thing goes if you were going to be like a full-time, let's say, nurse, to per diem, or going from a full-time job to, let's say, 2 part-time jobs. So depending on what your new employment is going to be, or your new source of income, it could either help or it could hurt your transaction. You may have to wait. When the source of income is an irregular source of income, then we have to see a record, and this is the same for a lot of lenders, that you are receiving that income for at least 2 years.
All right, our final question. What are the benefits teaming up with HUECU versus another organization? Helen?
Well, I hope that we've outlined some of those, but I feel that our team is very experienced, and we've been working in the industry for a lot of years and built up a very good reputation. We do care for our borrowers. We're looking to do what's in your best interest, and our pre-approvals are very well respected in the realtor community because we deliver. Our loans close. We carefully qualify people. So I think that we should be at the top of everybody's list who's eligible for consideration to be your lender for those reasons.
All right. Thank you, Daisy and Helen, for your presentation today. I really appreciate it. And of course, everyone else watching. And besides Daisy and Helen, we have a team of some experts who are here to assist you in your home buying process. And you can visit us at huecu.org/home-loans. So any of our experts can help you obtain your dream home or any other lending opportunities that we have. And also, please take a minute to fill out our survey. We have some surveys, and every survey filled, we will be donating to Cambridge YWCA to support the unhoused in our community. And that's at huecu.org/survey. And of course, we have a disclaimer. This is obviously general information, and we encourage you to speak to your specific needs with any of our experts who can assist you because everybody's information is different and everyone's income is different. And also, if you need some more information or you want to know more about us, you can visit huecu.org. And also a reminder to follow us on social media at myhuecu. And also the recordings will be available on our YouTube channel at myhuecu. And you'll get an email of the recording for today. And again, thank you so much, Helen and Daisy, for your expertise and your presentation today. And thank you, all of you, for joining us. We really appreciate your business, and we look forward to serving you. Have a great day.